From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for June 21st, 2016. In just a moment, we'll be taking a look at the USDCAD, the US dollar versus the Canadian dollar for today's trade analysis. But first, a recap of one of the trade suggestions from the past few days. We're looking here at the EUR-USD, the euro versus the US dollar. We're looking at the 4-hour time frame, but it's important to note that with the euro, we're likely to see volatility the closer we get to Thursday's Brexit referendum, the vote that happens on Thursday, the separation of the UK and the EU. We'll likely see some volatility for the euro if they do indeed separate, or even if they don't separate. So we'll want to pay attention to that using appropriate risk strategies. Yesterday we took a sell into the blue shaded area at the very top of the chart, the 1.1355 or so level. Took a sell there during the trade room. We saw the market push all the way down here into the orange shaded area, the low 113s. Closing some profit into the orange zone. That was our next decision point on the chart. Locking in with the stop loss. Once it reached the orange zone, we locked in with the stop loss. Couldn't lose on the trade. Closed some profit. Then the market went right back up, close to the blue zone, took us out of the remaining position, the remaining lots that we had on the trade, and then came right back down. I think it's a very similar situation today. If it takes any run back up here towards the blue zone, that becomes a potential resistance. Any breakdown of the orange zone becomes a breakout continuing lower. On the other side of this, if you think it's going to go up, then this orange shaded area is that area that you're considering buying into support. So either way you look at it, whether you're a buyer or a seller, whether you expect the Brexit to separate or remain, one of these two directions will be the main player. At this point, we're going to likely see the market bounce between the blue and the orange zone until we get a breakout above the blue zone or below the orange zone. But currently out of yesterday's position, but with profit. Let's go ahead and take it on over to the USDCAD, the US dollar versus the Canadian dollar. Something we've been, of course, discussing in the live trade room is the correlation, the inverse correlation of oil prices and the Canadian dollar. If oil prices are on the rise, then we typically see the USCAD go down. That's good news for the Canadian dollar, and this causes this currency pair to go down. So rising oil prices, US CAD goes down. Falling oil prices would typically mean that this currency pair is going to go up, because that's good or bad news for the Canadian dollar. So definitely watching oil prices for the movement, and then inversely correlating over here on the US CAD. Today we don't have any significant news on the calendar left for the U.S. trading session. We have a couple of speakers, Fed Chair Yellen testifying, and one other speaker, the ECB President Draghi, speaking at 9 a.m. Eastern U.S. time. So a couple of things to think about, 9 a.m., 10 a.m. with those two. But other than that, we don't have any economic news left to be released for the day today. We do, 8:30 a.m. Eastern time tomorrow, so about 24 hours from now, we have core retail sales out of Canada. Of course, would also affect this currency pair as well. So we have been studying. Yesterday, actually, we took a look at the potential setup of a consolidating or a triangle pattern here on the daily time frame. You can see the previous downtrend, the red trend line over here on the left. Then it went up, the shorter red trend line, and now we found resistance along a couple of times along the green trend line coming down from the top, and support along the blue trend line coming up from the bottom. So we're at the bottom of that triangle. That's important to note. Of course, we're making a higher low. So if it continues that pattern of higher lows, we would look for a buy scenario. It would be difficult to sell it right now, at least, into support and at the bottom of what is looking like a triangle pattern. So selling is difficult. Buying is at least a better risk-reward option at the current moment as it dips down into support. Doesn't mean it's going to go up. It just means risk-reward-wise has become better if it dips into support. Just a quick peek at those oil prices. We saw the rally over the past couple of days, and now today we're finding some resistance. Take a look right there inside the green shade areas. Found some resistance right around the 49.85 or just underneath the 50 level. Found some resistance. If it breaks underneath 48.95, 49 or 49, we might look for a pullback down again. If it breaks 50, then we look for it to continue to go back up. That's the U.S. oil chart, UK oil chart, similar situation, the pink shaded area. Again, if oil prices fall, we expect the USCAD to go up. If oil prices rise, we expect the USCAD to go down. So definitely watching this resistance level on oil. If it finds resistance, falls back down, that's going to cause the USCAD to go up. So consider that on your trading options. Let's go ahead and take it on down. Let's zoom it in a couple of times on the daily time frame. Take a look at that yellow shaded area. Maybe not that far. Let's go out like this. Take a look at that yellow shaded area between 127.50, 127.80. You go back in time, there's some resistance here a couple of days. You go back here, top of the red box resistance, bottom of the blue box support. So we know that that yellow zone, 27.80 down to 27.50, is a key decision point where the market has made trading decisions to buy, sell, enter, and exit before. So the main focus today is staying within or above there with a higher low along the blue trend line. We could be looking for support and a rally back higher towards the orange shaded area as our resistance target. Of course, above the orange zone, we'd look for it to continue up towards the blue zone. That's what history tells us, all the way back here where the black box is. On the other side, the risk is that it breaks underneath the yellow zone and continues down towards the pink shaded area. So we know where our decision points are, and our decision point right now is support at the yellow shaded area between 27.80 and 27.50. Now let's take it down to the 4-hour time frame. As we get down here, we see it settling down here into support, into the yellow shaded area. Could be, again, as deep as 27.50, because if you look back here, you can see that as well. So just because it hasn't bounced off of 27.80 doesn't mean it's not going to go up. It's just having a little bit of a slump into this yellow zone. The entire yellow zone is our support zone, even as deep as 27.50. Your stop loss should be underneath there. I currently have a 45 pip stop loss on a trade from 27.80, but again, I don't think it's too difficult to expect. It could even see a dip towards 27.50. Fibonacci from the lowest low to the current resistance high puts the 786 Fibonacci retracement level at 27.45. That's just at the bottom of our yellow zone. So again, not too difficult to see. It touching that Fibonacci level, 27.45, 27.50. I don't know if it will or not, but that's definitely something that we need to be aware of with our risk management for the trade. So I'm in a buy, looking for it to bounce off the yellow zone and go back up. That would, of course, would mean that we need to see oil prices bounce off resistance and go down for the USCAD today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.